So, you do have some homework problems that ask you to calculate tax liability. Has anybody started on their chapter 1 homework yet? Yeah? Okay, have you encountered those problems? Okay. And have you scratched your head about a couple of them, or you're doing all right? Okay, good, good. So again, you got to be careful, because I think there is one problem that gives you the taxable income. There's another one that gives you the total income. It's like 2 taxpayers. And so you have to add that income together and then subtract following our formula there. So be careful when you're doing those. We're gonna go through how to calculate that tax liability in this section here. Like I said, there are 2 ways to calculate. There is how are they gonna tell me? I don't know why I'm kind of tripping over my memory here. We've got, you can use a table to do it, the tax tables, but they only go up to $100,000 of income. So if you have a client that's got more than $100,000 of income, of taxable income, we're talking about taxable income here, then you can't use the tables. You have to do calculations and use the percentage method. So just like with payroll. All right, so here's a couple of examples. We've got Denby is a single taxpayer, has taxable income of $42,787. Referring to the tax table, and they're just going to give you the answer here. Referring to the tax table, and I'll show you the tax table in just a second. His income is between $42,750 and $42,800. If you read across the table to the single column, it gives you a tax of $49,13. So let's take a look at come on. Oh, there we go. These are the tables. I'm gonna have to go back there to get back to the original part, but so looks very similar to a payroll, right? Where we had an income range, and it tells you right up here, it's the same sort of configuration as in payroll when we're talking about withholding. If taxable, again, taxable income, not total income, taxable income, so this is after the deductions. Taxable income is at least this amount, but less than this amount, then choose that row. So if it is right on the line, so here we've got at least 5, but less than 15, and then the next one is at least 15, but less than 25. If it's exactly 15, you're gonna use the higher one, the next one down, because 15 is not less than 15, right? But it is at least 15, okay? So if it's right on the line, use the next one down. So you find the bracket, and then you move across the table based upon filing status. Now, if there's an asterisk here for married filing jointly, this also applies for qualifying widow or widower. That's what that asterisk is for, okay? So if we have, let's just make something up. Let's say we've got somebody who is married filing jointly, MFJ, and their taxable income, we'll start with that. So these are 2 individuals. Their taxable income comes out to $57,422. We can figure out what their tax is using the table. So we scroll down to find $57,422 on the table. Okay. 54, 55, 56, 57. All right, so $57,422 is at least $57,400, but less than $57,450. They are married filing jointly. So we're gonna look, 57, so we're gonna look for married filing jointly. and then we're gonna look and see how much their tax is. $64.51. Easy peasy, right? That is their tax liability. And remember, they may have certain credits. If you remember the formula, they may have certain credits that will reduce this amount down. And maybe they've already paid it. They had a withholding of $7,000 throughout the year. If they had a withholding of $7,000, then they've overpaid, they're gonna get a refund, right? But this is how we can find their tax liability. Let's do another one. How about single taxable income of $89,401. All right. So we're going to start with the taxable income amount, not the filing status, the taxable income amount. So $89,401. We're still below 100,000, so we're good. All right, 89,000. 89,401 is at least 89,400, but less than 89,450. They are single. Now you can't really see here, but that is single, the first one. Where'd I go? 89,401. Single is this line, so 14,981 is their tax liability. Using the tables is super easy. Now, you may have to do some calculations before you get to this number. And remember, so this is the taxable income. Now, what if we don't have taxable income? Let's do a little bit more complex one, but we'll still stay with the table. So let's say we've got, and you have a homework problem that's very similar to this. We have married filing jointly. Spouse 1 has W-2 income of $41,027. Spouse 2, W-2 income of $47,011. All right. We've got their filing status, and we know what this is their total income. It's not their taxable income. So the first thing we're going to have to do is add these two together. 82088. All right. So this is their total income. We have to subtract a deduction. If we think back to the simple tax formula, we're going to have to subtract that standard deduction, right? So deduction. And that standard deduction is going to be based on filing status. So, I don't know what was it, 27,700, is that right? For married filing jointly? I think that's right.
Yeah, 27,700.
27,700 is our standard deduction for married filing jointly. We'll subtract that. We have 28,730. All right, now we've got our taxable income. Now we can use that and apply it to the table to figure out what their tax liability is. This is that part where it's times tax rates, and then to get to our tax liability. So we're doing this behind the scenes. So 6328. Okay. So 6328 is at least 6,300, but less than 6,350, right? So we are married filing jointly, which is the second one over. I lost myself. $67.99. I get that right? $67.99. So. What did I say, $67.99?
Yeah.
Okay. There's our tax liability. Now again, we have no information about whether they're getting a refund or whether they owe additional tax, right? Because we don't know what their withholding is. We don't know at this point if we have any low power mode. All right. If we have any credits that that they're entitled to that will affect that. So we just know what their tax liability is. You know, if they've already paid in, again, if they've already paid in $7,000, then they're going to get a refund. If they paid in $6,000 and they don't have any other credits, they owe $799 that they're going to have to pay. Okay? So, questions about this? Again, this is just using the table. I'm going to show you another method when you can't use the table, when you got an income level that's higher, that's off the charts. So, and again, this is taxable income. So in theory, see, it ends at $100,000, and it tells you right there. Use the tax computation. There is a worksheet that you can use in here if that's easier for you. I don't generally use the worksheet, but that's fine. What was I going to say? I lost my train of thought. I mean, you could have somebody who made $500,000 a year. Their total income is $500,000. But because of deductions and adjustments, it brings it down to under $100,000, and then you can use the tax table. That means they've had they got quite a lot of deductions, but it's possible, right? No questions about that? Okay, let me do this.